Hi everybody, Alex Player from Expert Forex, and it's been the end of a great trading week, and I thought I'd share some of the trades that took place this week. And there are four trades that stand out quite a lot. They generated over 1,000 pips, and there were only four trades. So let's have a look at these trades in a little bit more detail. Now, before we do that, I just must remind you that there are two ways that forum members can learn from trades like these. Firstly, there are 4 live trading webinars where we discuss these type of trades, and they are in the form of Zoom meetings. And we also have client and Expert Forex posts where clients and Expert Forex will post trades that are of interest or of educational importance. This is a paid forum, but the link to the forum will be given to you in the description of this video and as well as in the commentary of the video. Okay, so let's have a look at trade 1. And trade 1 was a long entered because of a divergence on the RSI and a trendline violation on the RSI. Also, the 50 cross line was violated, and we placed a stop below the last candle low and the initial target. What we used here was a fib target. So if there's a 38.2% retracement, then the extension comes into place, and a 161.8 extension was used to find the target. Now, the problem with a lot of trading is that you enter a great deal and you don't know where to put your target. Now, there's an example of Fibonacci providing information about where to put a target. Now, there was a backup target, and what we said is we will exit if the price crosses over the 4 moving average, which is offset by 4. So we basically catered for the deal, and there the deal is. You can see this beautiful divergence. There's the trend line violation. There's the crossover over the 50 line, and we placed our entry right there on that crossover at the close of the candle, and away it went. And so let's see what actually happened, and there is the result. So it was a 160 pip move. You can see there's the entry. It hit the fib target. So wonderful trade there. It also never crossed over the moving average, and it would have, if we had used that as an exit, we would have been a little bit worse off, because you can see the exit was over here and the moving average crossover would have been over there. So interesting trade, simple trading rules. Divergence, trendline violation, 50 line crossover, very easy. The lesson here is that the RSI provides great entries and the moving average creates great exits, and the Fibonacci levels provide great exits. So let's move on to the next trade, which was a short into because of a divergence again on the RSI and a trendline violation. And now you can spot the pattern, can't you? And it also crossed over the 50 line. A stop was placed above the last candle, again a great pattern, and the exit was planned for a crossover of the 4 moving average offset by 4. Further confirmation of this trade was that the price bounced off upper horizontal resistance and non-horizontal resistance. So it just set up as a great trade. And let's have a look at the results. And there again, there's the result, 270 pips. And as you can see, the exit was based on a moving average crossover close. So in other words, the price has to close over the moving average for it to be valid. Again, the lesson here is the RSI provides great entries and the moving average creates great exits. So we look at transaction number 3, slightly different. This one's trading in a channel, and we had again an RSI trendline violation there. We did not have a divergence here, which made it a weaker transaction, but the fact that it was inside of a channel improved the chances of success, so we took it. And it also passed over the 50 line. So let's have a look at what happened there. And in this case, we used the channel line as our exit. So you can see there's the channel, and it just bounced on our target, and that was a 310 pip transaction. Again, RSI trend line violation, 50 line crossover. That's all it took to get in, and then we just sat in it until the target was hit here. If the target wasn't hit there, we would have exited on the crossover of the moving average. So let's have a look at transaction number 4, and that has exactly the same profile. It has a divergence, it has a trend line violation, it has a 50 line crossover, and let's have a look at what happened there. And here we go. So it went exactly the same as the 50 line crossover happened. We entered over there and we exited this time on the moving average crossover. So that was another 130 pips. So you can see the currencies that we used as I went through. And please, just stop the video and study these charts if you need to. But here you can see a nice before and after situation. We took photos before and we then did and this is the type of thing that should go in your trading journal. You should be taking photos of before the transaction and after the transaction and analyzing the results that way. So what are the lessons that we can learn here? Forex trading does not need to be complicated. Can you see how easy that was? Identify a divergence, identify a trend line violation, wait for the 50 line crossover, and away you go. A rule system can be highly successful. So that was a rules system based technique, and some system can be learned very quickly. I mean, you've most probably learned the system right now on this video. It's so easy to use. And then the last thing, which I must stress, and this is one of the biggest things, and psychologicals must probably spelled incorrectly, but the psychological side of Forex has to be conquered for you to do these trades. They look so easy, don't they? I mean, they look so easy, but psychologically, Forex traders cannot do those trades. And that's why we have little devices to help us. We've got a moving average crossover little indicator that prevents us from having to watch the moving average. It will close the deal as the price goes over it, or closes over the moving average. So we take emotion out of the transaction. A lot of traders would exit. Now go and have a look at these deals and you will see that there's a lot of motivation to exit too early in these trades. And what you then do is you ruin your risk return ratio. You'll see that these trades have got very little risk because the stops are tiny, but the targets are huge. So your risk return ratios are actually very high. Okay, so again, I must just remind you there are 2 ways our forum members learn about these trades and discuss them and actually see them before they take place. So they attend one of our 4 live trading webinars a week. They Zoom meetings, and they also see the posts of these trades in the forum. So I hope you enjoyed this video, and I hope you've learned something about Forex trading, how simple it can be, and what fantastic gains you can have if you get your psychological side under control. From me, Alex Aploy, thank you for watching, and cheerio.